What if I told you there are two companies battling it out to revolutionize the entire financial industry? And what if I told you that by picking the right one, you could potentially 10 times your money? This isn't some fantasy, guys. This is the very real world of fintech, and these are two of the biggest players in the game, SoFi Technologies and New Holdings. Both are disrupting the traditional banking model and attracting millions of users globally. If you only watch one video today, make sure you watch this one all the way till the end. We're going to break down everything you need to know about SoFi and New. By the time this video is done, you'll know exactly which stock is right for your portfolio. Now before we dive into the numbers, hit that like button. Let's get 1,000 likes on this one. Share the video with your friends, and subscribe so you don't miss out on the next important financial investing update. SoFi Technologies, ticker symbol SoFi, started with a simple yet powerful idea: refinance high-interest student loans to help graduates save money. It was a hit and they quickly became the go-to for student loan refinancing. But SoFi didn't stop there. They saw an opportunity to build a one-stop shop for all things personal finance. They expanded into other lending products like mortgages and personal loans, and then took it even further. Today, SoFi is a full-blown financial technology powerhouse. We're talking banking, investing, even cash management, all within one convenient app. They're going head-to-head with the big banks and, frankly, they're winning. But here's the exciting part: they're just getting started. Alright, let's dive into the numbers. In 2023, SoFi pulled in an impressive $2.07 billion in revenue, a 36% jump from the previous year. That's some serious growth, guys. And it's not just revenue. SoFi's membership base is exploding. They ended 2024 with over 10 million members, a 33.3% increase year over year. That's 2.5 million new members in just 12 months. But here's the kicker: they're still in hyper-growth mode, investing heavily in expanding their product offerings and customer base. This aggressive strategy comes with risks, but it also presents a massive opportunity for investors. Let's see what our trusted stock analysis terminal, Forecaster, who's sponsoring this video, has to say about the company. Remember, you can get your free trial of Forecaster now with my special discount link in the description. SoFi Technologies Inc. has a market cap of $19.45 billion, an EPS of 0.19, and a PE ratio of 94.32. Positive points include significant revenue growth from approximately $977 million in 2021 to $2.067 billion in 2023, and maintaining a gross profit margin of 100%. SoFi also reported an improving net income, with a net loss of $300 million in 2023, down from $483 million in 2021. Their investment in R&D grew from $276 million in 2021 to $516 million in 2023. However, there are negative points. Operating expenses significantly increased to approximately $2.257 billion, and total debt stood at approximately $5.362 billion. SoFi also reported negative cash flows from operations, approximately negative $7.23 billion in 2023. On the bright side, comparing 2022 and 2023, revenue rose sharply from $1.52 billion to $2.067 billion, with quarterly revenues growing from $464 million in Q1 2023 to approximately $691 million in Q3 2024. The increase in R&D spending to $516 million in 2023 is crucial for future innovation. SoFi Technologies Inc. is showing promising growth, particularly in revenue and R&D commitment, suggesting a focus on future innovation. However, challenges remain in terms of profitability and cash flows. Now let's talk about SoFi's secret weapon, Galileo. No, not the astronomer. I'm talking about the fintech company SoFi acquired in 2020 for a cool $1.2 billion. Galileo provides the technology behind the scenes for other fintech companies. Think of them as the plumbing that allows apps like Chime and Robinhood to function. This acquisition was genius. It gave SoFi a massive technological advantage and a whole new revenue stream, and it's paying off big time. Let's talk about SoFi Money, their checking and savings account hybrid. This isn't your grandma's bank account. With SoFi Money, you get a competitive APY, no monthly fees, and access to over 55,000 fee-free ATMs. They've eliminated all the unnecessary fees and hassles of traditional banking, and people are loving it. SoFi Money has been a huge driver of their recent growth, and it's easy to see why. Now let's move on to SoFi Invest. They've made investing accessible to everyone, regardless of experience or income level. You can buy stocks, ETFs, even crypto, all within the SoFi app. They offer fractional shares, so you can invest in companies like Apple or Tesla with just a few bucks. And their educational resources are top-notch, making it easy for beginners to get started. It's important to remember that they're still in the early stages of their growth journey. They're investing heavily in marketing, product development, and technology. These investments are essential for long-term growth, but they also impact profitability in the short term. However, SoFi is making significant progress towards profitability. Their revenue is skyrocketing, and they're rapidly expanding their customer base. So is SoFi a buy? That's the million-dollar question, and the answer depends on your individual investment goals and risk tolerance. SoFi is a high-growth, high-risk investment. They have the potential to be a massive winner in the fintech space, but there are also risks involved. However, if you're looking for a company with a strong track record of growth, a compelling vision for the future of finance, and a management team that knows how to execute, then SoFi is definitely worth considering. Now let's shift gears and talk about Nu Holdings, better known as Nubank with ticker symbol NU. This fintech giant is shaking things up in Latin America and beyond. Nubank started in Brazil with a mission to make banking more accessible and affordable for everyone. They were sick and tired of the traditional banks charging outrageous fees and offering terrible customer service. So they decided to do things differently. And boy, did it work. Nubank has experienced explosive growth since its launch in 2013. They've amassed over 110 million customers across Brazil, Mexico, and Colombia, making them one of the largest digital banks in the world, and they're not slowing down. Nubank is expanding into new markets and product lines at a breakneck pace. They're going after credit cards, loans, insurance, investments, you name it, they're probably working on it. What's driving Nubank's incredible growth? For starters, they've completely disrupted the traditional banking model in Latin America. They offer a seamless digital experience with no hidden fees and fantastic customer service. They've also tapped into a massive underserved market, the unbanked and underbanked population of Latin America. Millions of people in the region previously had limited access to financial services, and Nubank is changing that. Let's take a look at the numbers. In 2023, Nubank generated $7 billion in revenue, a staggering 46% increase year over year. That's right, you heard that correctly, 46%. And here's the kicker, Nubank is profitable. They're one of the few high-growth fintech companies that can say that. In 2023, they reported a net income of $1 billion. Now let's dive into Nu Holdings Limited. They have a market cap of $58.61 billion, an EPS of 0.38, and a PE ratio of 32.09. Nu Holdings saw their revenue grow from $4.79 billion in 2022 to $7.01 billion in 2023. They also reported a net income of $1.03 billion for the fiscal year 2023. Their cash and cash equivalents stood at approximately $5.92 billion as of December 31, 2023. The gross profit ratio improved to approximately 35%. However, general and administrative expenses have grown from $1.33 billion in 2022 to $966 million in 2023. There have been no recorded R&D expenses in recent years. There was a significant change in working capital, negative $5.48 billion. Their long-term debt stood at about $1.06 billion. The continuing increase in revenue suggests a strong business model. The shift from loss to profit showcases recovery. However, the absence of R&D expenditure raises concerns regarding future innovation. The current liabilities against assets indicate a need for careful management of debt. Nu Holdings Limited shows promising growth potential, particularly with its strong revenue increases and return to profitability. However, challenges such as heavy operating expenses, the absence of R&D investment, and significant changes in working capital management present risks. Nubank is more than just a bank. They're building a complete financial ecosystem with a suite of products designed to meet the needs of their customers at every stage of life. They offer everything from personal loans and investment accounts to life insurance and even a cryptocurrency trading platform. Nubank is on a mission to become the go-to financial platform for millions of people in Latin America and beyond. Of course, no investment is without risks. Nubank operates in a highly competitive market, with established players like 𝗗𝗟𝗏𝗧 and Banco Bradesco vying for market share. They're also exposed to macroeconomic risks, such as inflation and currency fluctuations, which can impact their profitability. It's important to be aware of these risks before investing in Nubank. So, is Nubank a good investment? They have a strong track record of growth, a loyal customer base, and a proven business model. However, they're not cheap. Nubank trades at a premium valuation compared to other banks and fintech companies. Investors are betting on their continued growth and expansion into new markets. Ultimately, the decision of whether or not to invest in Nubank is up to you. Do your research, assess your risk tolerance, and decide if Nubank aligns with your investment goals. Alright guys, we've dug deep into SoFi and Nu, exploring their businesses, their financials, and their potential. We've looked at SoFi's impressive revenue growth, their expansion into multiple financial products, and their ambitious goal of becoming a one-stop shop for all things personal finance. And we've seen Nu's incredible customer growth in Latin America, their innovative approach to banking, and their mission to disrupt traditional financial institutions. Now it's time for the million-dollar question, or maybe even the multi-million-dollar question, depending on your portfolio. Which of these fintech giants is the better investment? You know me, I'm not in the business of giving financial advice, and any investment decision should be based on your own research and risk tolerance. But I can share my thoughts and analysis of these two companies based on the information we've discussed. Remember, this isn't about picking a winner and a loser. Both SoFi and 𝗗𝗜𝗦𝗖𝗓 are strong players in the fintech space, each with their own unique advantages and challenges. The real question is, which company aligns better with your investment goals and risk appetite? Are you looking for a company with a proven track record of revenue growth and a strong foothold in the US market? SoFi, with its diverse product portfolio and ambitious expansion plans, might be a compelling option. Or are you more drawn to a company disrupting a massive market with a unique business model and a laser focus on customer satisfaction? 𝗗𝗜𝗦𝗖𝗢𝗗𝗘 Holdings, with its incredible growth in Latin America and its mission to bank the unbanked, could be an exciting opportunity. Ultimately, the decision is yours. But by carefully considering the factors we've discussed, you can make a well-informed choice that aligns with your investment strategy. Remember, investing is a marathon, not a sprint. So choose companies you believe in for the long haul, companies with strong fundamentals and a clear vision for the future. Let's recap the key takeaways for each company. SoFi boasts impressive revenue growth, a diversified product ecosystem, and a strong brand presence in the US. They're targeting a massive market, aiming to capture a significant share of the personal finance pie. However, they're also facing stiff competition from established players and still need to achieve profitability. On the other hand, 𝗗𝗜𝗦𝗖𝗢𝗗𝗘 Holdings is experiencing explosive customer growth in Latin America, challenging traditional banks with its digital-first approach and low-cost structure. They're tapping into an underserved market with huge potential, and their customer-centric model is proving to be a winning formula. However, their reliance on a single region exposes them to geopolitical and economic risks, and they need to demonstrate their ability to maintain profitability as they scale. Both companies are led by experienced management teams with a clear vision for the future. But remember, past performance is not indicative of future results. The fintech landscape is constantly evolving, and both companies need to adapt and innovate to stay ahead of the curve. I currently own stocks in both companies, and personally I like 𝗗𝗜𝗦𝗖𝗢𝗗𝗃 a lot because of its strong revenue and return to profitability. That being said, I see a lot of potential in SoFi. They're playing in a massive market, and their ambition to be a one-stop shop for all things personal finance is a bold move. Their focus on technology and user experience is spot on, and they're already seeing strong traction with their product offerings. However, profitability remains a concern, and they need to prove they can compete effectively against established financial institutions. Their success hinges on their ability to continue innovating, acquiring new customers, and ultimately, achieving sustainable profitability. If they can execute on their vision, SoFi could become a dominant force in the fintech space. But it's important to remember that they're still in the early stages of their journey, and there's always a level of risk associated with investing in growth companies. I did previous video on SoFi titled 10 Million Reasons You Should Buy SoFi Stock Before January 27th. You should check it out. 𝗗𝗜𝗦𝗖𝗢𝗗𝗃 Holdings is a fascinating company. Their growth trajectory is nothing short of remarkable, and they've achieved in a few years what traditional banks have struggled to do for decades: build a loyal customer base in a notoriously underserved market. Their low-cost structure and customer-centric approach are major competitive advantages, and they're well-positioned to capitalize on the massive growth potential of the Latin American market. However, their dependence on a single region carries inherent risks, and they need to demonstrate their ability to expand into new markets successfully. Maintaining profitability as they scale is crucial, and they'll need to navigate the ever-evolving regulatory landscape in the countries they operate. If 𝗗𝗜𝗦𝗖𝗢𝗗𝗃 Holdings can maintain its current momentum, expand its geographical reach, and continue to innovate, they have the potential to be a major player in the global fintech arena. However, like SoFi, they're still in growth mode and their future success is not guaranteed. Remember, this is just my take on these two companies. Your investment decisions should be based on your own thorough research and risk tolerance. Don't just take my word for it, or anyone else's for that matter. Do your due diligence, read financial reports, understand the company's business models, and consider their competitive landscape. Think about your investment goals, your time horizon, and your risk appetite. Are you looking for short-term gains or long-term growth? Are you comfortable with higher volatility, or do you prefer more stable investments? Answering these questions will help you determine which company, if either, is the right fit for your portfolio. One thing is certain: the future of finance is digital. Both SoFi and 𝗗𝗜𝗦𝗖𝗢𝗗𝗃 Holdings are at the forefront of this revolution, leveraging technology to disrupt traditional financial institutions and offer consumers more accessible, affordable, and user-friendly financial products. The fintech space is incredibly dynamic and constantly evolving. Companies that can adapt to changing consumer preferences, innovate at a rapid pace, and navigate the regulatory landscape will be the ones that thrive in the long run. Whether you choose to invest in SoFi, New Holdings, or another fintech company altogether, remember to stay informed, do your research, and make investment decisions that align with your financial goals and risk tolerance. And that, my friends, is why I love investing in disruptive companies like SoFi and New Holdings. They're not just businesses, they're forces of change, reshaping the financial landscape and empowering consumers in ways we never thought possible. But finding these game-changing companies, that's the real challenge. It takes time, research, and the right tools. If you want to take your investing to the next level, Forecaster is the tool I trust to find incredible stocks like these. Don't wait, try it for free today. Use the link in the description and code Galore10 to get started. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Don't forget to smash that like button if you enjoyed this video and subscribe to the channel for more stock market breakdowns and investing insights. Until next time, stay informed, stay invested, and keep crushing it in the market.